JSW Cement IPO is concluded. JSW Cement is part of JSW Group. The GMP has been in the positive zone since the IPO has been launched. The current GMP was hovering between 3% to 6%. In this video, I am going to talk about those important details which will help you to decide on whether to sell this stock or to hold it for a longer period of time. Anchor investors invested 1080 crores in this IPO, which shows their immense confidence in this particular stock. This investment came despite the negative numbers. So before we start, if you are new to this channel, subscribe to my channel for more such financial contents without any nonsense. This video is completely built upon my previous full review about JSW Cement IPO. I highly recommend you to watch that video first before you watch this video. JSW Cement is ranked among top 10 in cement manufacturers in India by its sales volume and installed capacity. It is also among top 3 fastest growing companies in the cement sector. It is also the largest manufacturer of GGBS, ground granulated blast furnace slag. It is the eco-friendly product which is manufactured using blast furnace slag. It holds 84% market share in this product category in financial year 2025. It has a strong distribution network of 4,600 dealers and 8,800 sub-dealers. These are our very strong standing points of JSW Cement IPO. So what did really hurt JSW Cement? The revenue has been very inconsistent in last 3 years. It has a debt of 4,200 crores, which really brought down the margins of JSW Cement. Losses from the joint ventures added up. All these factors brought down the profitability of JSW Cement. So how is the outlook for the sector and this company? Outlook looks so promising in medium term to the long term. Cement demand is rising in India, driven by the infra push by the government and strong demand in housing. There are also challenges for this company and the sector. So let's talk about some of the challenges. Cement industry is facing a very challenging landscape in India. Well-established players are aggressively adding their capacity by adding new plants and acquiring new and regional players. About 60 million metric tons of capacity has already been added in last 2 years, and another 80 to 90 million metric tons are expected to be added in next 2 to 3 years. The surge in supply is putting pressure on the pricing and also in the margin across the industry. So let's come to the important part of this video, listing day strategy. This IPO is pricey, no doubt about it, but the valuation, enterprise value to its EBITDA, is comparable with its industry peers. Here is what I would do if I got an allotment. This is not an IPO which I would normally invest. If I get an allotment, I would keep my stop loss at listing price or at the issue price and then trail the profits till it reaches its peak GMP or somewhere between 10% to 15% gains in a short term period. But if you are a person who is believing in India's consumption story and infra push by the government, then I would keep my stop loss below the lower end of the issue price and then trail the profits for a longer term period and wait for the industry tailwind. This company is also a market leader. It is among the top 10 businesses in cement industry. It has potential to scale up through its new plant in Rajasthan. It is market leader in GGBS. Its eco-friendly product line is the future in the cement industry. So having said all these things, this IPO carries risk. Only an aggressive investor can think of long-term investing in this IPO. And if you are an aggressive investor, you can definitely hold it for longer term. I would recommend keeping a adequate downward protection as a thoughtful stop loss. So that's all today. I'm Harshit Shetty signing off from this video. Thank you for watching.